It may seem like the market's moves are direct reactions to statements made by the Fed. Could be.
As a matter of fact, some Wall Street firms have hired linguistics PhDs to analyze the words that come out of their mouth. I think that's crazy, but that shows how focused they are on what they have to say. When the Fed first released the minutes that announced a 75 basis point hike and said they wouldn't have to raise as much going forward, that was extremely positive. Look at this chart. It shot up immediately.
But gains made were soon lost after the Fed's remarks right afterward. Overall, senior analyst Tony Sagami, editor of Disruptors and Dominators, sees a bullish streak on the horizon.
The U.S. economy comes down to two basic things: makers and takers. There's companies that make products, and then there's other companies that deliver us to our shelves. And so those are the two parts of the economy that are thriving.
He says that stems from inflation getting lower.
CPI looks in the past where things have gone up over the last 12 months. And that's running hotter than people want and the reason for the Fed panic. But that's in the past, and it's also the retail level. Let's take a look at the wholesale level. This is the ISM Manufacturing Prices Paid Index. The makers are paying less and less for their input, whether it's copper, cardboard, paper. Prices of things they buy are going down. They peaked in March, and they've been dropping ever since July. So this is evidence of declining inflation at the wholesale level, and that's a big deal. Another big disinflationary thing we're seeing is that the cost of shipping containers across the Pacific Ocean, those giant containers we see on those ships, the price to ship one container fell from $20,000 to $2,400. That's almost a 90% drop in the price of shipping. So that's an important indicator. Also why inflation has peaked. I don't know if you can call that a pivot. Maybe it's more of a pirouette. But the Fed is changing from being hyper aggressive to slowing down. And when the Fed stops its attack on interest rates, that's when the stock market skyrockets.
In the meantime, certain types of stocks are shining.
The Dow Jones has been a star recently.
In the month of October, the Dow Jones Industrial Average was up 14%. In 1 month, just in the month of October. And it's the best October ever in the history of the stock market. That's pretty impressive. And what I think is very interesting is that the NASDAQ was only up by 2.5%, even though that Dow Jones was up by 14. So that shows you a very important shift between high tech to low tech. The Dow Jones is filled with energy, pharmaceuticals, industrials, the kind of things that were boring in the past and lagged badly behind, but now they are leading the pack.
In the energy sector, take a look at the price path of Baker Hughes. And in consumer staples, Disruptors and Dominators' position with Costco has seen upwards of 40% gains. The stock is currently trading in the $490 range.
There's a couple reasons Costco does well in both an inflationary environment and even during a recession. It's been one of the most recession-resistant stocks out there, and mainly because they have 148 million households that are paying between $60 to $125 a year just to be a member. As a matter of fact, business is so good, Costco just raised their quarterly dividend from 78 to 90 cents. And Costco reports its quarterly results December 7th. Wall Street's expecting $3.10, but that's low. Costco's going to blow that out, and it's heading even higher.
Okay, your thoughts on a year-end rally. How do you see it taking shape?
Well, are we going to get a Santa Claus rally? I think so. And it really doesn't matter when the Fed actually changes and pivots. It's what Wall Street's perception is. And right now, they feel better about what the Fed's doing than they were a month ago. When Wall Street gets in their mind that the market's better, rallies can be explosive. But I think we're going to see that rally sometime in the first half of 2023. So instead of being pessimistic, this is the time to get optimistic. And like my father always told me, buy your straw hats in January.
And prepare for dynamic weeks ahead.
Senior analyst Tony Sagami, it is always a great pleasure of mine to speak with you. Thank you so much for your time and insights today.
Let's do it again.